The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Well, not exactly. This is Steve Rhodes, and good morning or good afternoon. Oh, boy, I got a little echo coming in here. Get rid of that. Sorry about that, folks. Let's start over. Good morning or good afternoon. This is Steve Rhodes filling in for Larry Pesavento. This is the July 28th, or the terrific Tuesday edition of today's Trader's Edge Show, or Trade What You See. Of course, I'm taping this show. It's live right now from 9 to 10. So if you are listening in, I would love to hear from you. You can give us a call at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com, and inside the subject heading, please put radio show question. Of course, if you're listening in during the normal 1 to 2 o'clock broadcast of this, this is a recording, so you can send me an email, but I won't be able to get to it until the following show. So let's go ahead and get today's show started. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's take a look at the futures market and what's going on around the globe. Last night, a mixed bag in Asia. You had the Shanghai finish up 22 points, closed out at 33.83. The Hang Seng was up 169 points, so both of those about 0.7% to the upside. The Nikkei finished lower by 58 points. The S&P 200 in Australia was down about 0.25%, well, 0.4%, 23 points. And right now, the DAX in Germany trading out at 12,795, and the FTSE 6103. Both those are down just slightly. So now let's go take a look at the U.S. equity futures markets. We've got all of them trading to the downside. But what does that mean out there? What does it mean? So let me show you what it means. Let's talk about short term, where we're at, what to be paying attention to. I also see some chatter and discussion inside the den with regard to currency. So I'll show you. It's a beautiful setup that is in place right now, so that either side, being long or short the euro, should be able to figure out what's going to happen based upon the potential bottoming pattern inside the U.S. dollar index. So we'll certainly take a look at that. But let's first here focus in on the ES Mini, the S&P futures contract. Let's take a look at what is it that we know actually about the S&P. So here, what I'm going to do is bring over my market breadth. This is our TAS market breadth. It's not my market breadth, but it's our TAS market breadth profiles. And in the upper right-hand corner is where I really want you to focus. Now, I've just changed this to the S&P 500. So here's what I want you to know. These speed dials out here, they're all in the green level, green or blue level. And what that means is that there are more instruments that are trading for these time frames. They're weekly, daily, the 240 or 4-hour time frame chart, and a 60-minute time frame chart. So for each of these time frames, it tells us what is the market breadth. If it is in the green or blue area, it's telling us that it is market breadth positive. So for example, here's the 60-minute time frame chart for the ES Mini. I'm going to get rid of the instruments that are trading in between profiles. That's the blue line out here. And now what you'll see is right now, well, here's what we know as of 9:09 in the morning. There's 174 constituents within inside the S&P 500 that are trading above the top of their 60-minute profile. That's a bullish breakout. That's a momentum move to the upside, irrespective of some type of topping pattern that may be in play. This doesn't tell us that. We have to go take a look at the charts out there to determine that. But there's 154 instruments trading below the bottom of their profile. And, of course, the opposite is true. Some of those could be forming bottoming patterns out there. But from a market breadth standpoint, there are more instruments trading above profiles than below profiles. That gives us our bullish crossover. That's where the green line crosses the red, or vice versa, depending on how you're going to go ahead and take a look at this. But right now, the 60-minute time frame is market breadth bullish. So that's important to understand. Well, I believe that it's important to understand what the S&P is telling us, which is good. It may be a different message than the NDX 100. Now, that was for the that was for the 60-minute, the daily, the 240, and the weekly. We can also take a look at a shorter term time frame, a 30-minute time frame. And here, what we can see is this little red line is crossed over the blue. This is at 9:10 in the morning, so this is live. There's 148 instruments trade on a 30-minute basis above the top of their profile versus 198 below. So we've got mixed messages out here. It's just telling us about the selling pressure that we already see when we take a look at the futures contracts and where price is trading. So all of this stuff makes sense, doesn't it? Well, I don't know. I can't really hear you, but it does to me. Now, so what else do we know about the 30-minute time frame chart, since we just took a look at that? Well, first, we know that price is trading below its bullish structured profile out here. If you're watching this on Tiger TV, you'll see some little black dashed lines out there. You're looking at the ones that are closest to the right, and this tells us that and when you trade below the bottom of profile, well, it's bearish in structure unless there's some kind of bullish pattern that is formed, a bottoming pattern that is formed out here, and that's exactly what we're looking at. So this is apropos to filling in for Larry and doing a trade what you see, because Larry would say trade what you see. And what he would tell you see out here is a Gartley buy pattern. And that Gartley buy pattern on the 30-minute ES mini formed right out here at 6:30 this morning with a nice bullish hammer candle. Now, in a Gartley pattern, or in a Gartley pattern, you've got an A to B equals CD. I'm showing this to you with my green shaded area, so it kind of keeps with the look and feel of LP out here. But until there's a close below the bottom of that hammer candle, it's been tested a few times. There's not been a close below it. By the way, the bottom of that hammer candle, that support, that's 32.16. And if there is a close below that, well, the idea is that if you're long, you're wrong. That's the rhyme that Stevie likes to use out there, and that would suggest lower price. We could take a look at where that lower price might be. We could also see a green and red squiggly line on Stevie's screen out there. When that changes color, which it did at about 7:30 this morning, it tells us that price and that level should catch up to each other, which right now its price is about 32.25. So going into the open at 9:30, it's 9:12. We have a very valid bottoming pattern that has not been taken out. We know that market breadth is on a 30-minute time frame is bearish. On the hourly time frame, I take that back. On the hourly time frame, it was bullish. So what is the hourly time frame chart for the ES mini communicating to you and I? Is there any kind of a bottoming pattern here? And the answer is there is. What's that bottoming pattern? It's the TD9 count out here. TD9 count. Then, folks, if you're just new to me and the show, what I am showing with you or sharing with you, if you subscribe to the Mastery Probability newsletter, you'll see workshops that'll teach you each of these patterns. There's no secrets out here. I'm not keeping this a secret, even though some of these are proprietary tools that I've developed out here. I want you to use these, learn how to use these, and even pass these on to others out there, because this is really important, is understanding the markets, any market. This works for any time frame, any instrument. Well, you've got the TD9 count pattern, which is a beautiful pattern to learn. Very easy to learn out there. You don't need any kind of technical analysis. This is just about comparing the close of one bar versus another bar out there, and that helps us to set up resistance and support. So you've got a valid bottoming pattern on the 60-minute time frame. Price here, though, is trading below support, the bottom of its profile, 32.25, and it's below Stevie's green line, which is 32.28. So what we have right now at 9:14 in the morning is a mixed bag of messages. We have clear bottoming signals on the 30 and the 60-minute time frame chart. We've got both bullish and bearish market breadth, bearish on the 30-minute, bullish on the 60-minute. We're going to see who wins this battle out here, because it will switch from neutral to something else. But we know the battleground. That's the most important thing. And that was just the ES Mini. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Steve Rhodes filling in for Larry Pesavento during the 9 to 10 hour. If you're listening at the normal time during the Trader's Edge from 1 to 2, thanks so much for doing that. We're going to try to make the show as pertinent during that time frame as possible. We'll be back to normal programming tomorrow. So we're looking at the equity futures contracts here before the market opens. We were focused in on the ES Mini here and the intraday time period. Now, I'll just pull over the intraday time period for the NQ. What we see out here is a TD9 count bottom. And this formed below its second level of breakout area, 10,589. So this too has a bottom signal. That's the 30-minute time frame for the NQ. We're going to watch the 10,660 area. If price closes over that on a 30-minute time frame, you should anticipate a move up to the 10,703 area. And anything above 10,703 says rally on. And we can take a look at what rally on would mean to the upside and to the downside. Could be rally off. But if we take a look at the Dow Equity Future Contract, what you're going to see is also a Gartley buy pattern formed with that nice little hammer candle. That has not been taken out. Price right now is getting very close to Stevie's red line at the 26,409 area or 26,392. Now, a test and rejection of that level would suggest at least another run for the lows that we've seen or possibly take out those lows, whereas a close above, we'll call it 26,424, tells us that you should see more rally inside of the Dow. And in the Russell 2000, it too, for its short-term time frame is going to have a different message than the longer-term time frame. But right now, the 30, so you understand what's going on. Here, you've got the Gartley buy pattern that formed inside the Russell 2000. Price going to target Stevie's red line, currently priced about 1478. The bottom of that profile is 1478.70, so let's use that. Any close above that gets back inside a bullish structured profile and would suggest a move up to 1482. Whereas any move lower inside the Russell 2000, the level you'd be watching is 1468.20. That's its TD9 count breakout level. Any close below that is going to suggest going back and revisiting yesterday's lows out there. So we're waiting to see what happens with regard to the test of Stevie's green line and those profiles. Now, The daily time frame for each of the equity futures contract shows topping patterns out there. So here's your ES Mini. This has got the Rhodes Momentum Indicator top. This is a beautiful pattern. This is a pattern you absolutely want to learn how it forms and how to trade it. It'll give you a competitive advantage. If you're looking for a competitive advantage, then go subscribe to Mastering Probability for only 29 days. I'd rather you do it for longer, but at 29 days, it doesn't cost you a darn thing. What it does, it costs you a ton for not doing it. I don't want that to happen. Here we take a look at the ES Mini. It's got that nice Rhodes Momentum Indicator top, formed with that bearish engulfing candle, and the high for the day may have been in, because price inside the ES Mini has gotten up to Stevie's green line and that 32.49. TD stands for Tom DeMark. That was his tool, TD9 count pattern out there. He's got a couple books. You can go read about it. Their confusion is all heck. I try to simplify everything. But here, 32.49, Stevie's green line, the oscillator and change line, is what it's really called out there. That is a level of resistance. Any close above that, 32.49, that would then tell us that price would be targeting 32.67. That's the top of its daily profile out here. Right now, each of the equity future contracts for their daily time frame are trading in between support and resistance of the top and bottom of their daily profile. So nothing is broken out to the upside, nothing is broken down to the downside out there. Change in trend would say would occur if you saw two closes below the bottom of those profiles. So what are those profile levels? Pretty simple. 31.68 in the ES, 10.272 in the NQ, 26.178 in the YM, 14.54. Those are the numbers you want to have down on a pad of paper. That's right, a pad of, well, you can put it on your hand, you can put it anywhere you want, but you want to have those numbers written down. We've given you, I believe I gave you the upside. If I did, the upside is 32.67. That's resistance. 10.862 inside the NQ, 26.886 inside the Dow, and 14.92 for the Russell 2000 equity future contract. Those are the key levels to be paying attention to out here to guide us as to what prices next intent. But we could take a look at each of the cash indices, each of the equity future indices, each of the major market indices, and every single one of them has some type of topping pattern. It could be wave number 7, which would be letter G of part of the Chapman wave. It could be a TD9 count, such as the NQ here. It could be the Rhodes Momentum Indicator top, such as the NQ here. Could be Gartley buys and sells. Here we can see that price, we've got an absolute top inside the NQ. If we looked at the top 6 holdings inside the NDX 100, what we'll find is prices only come back to support levels. I did that yesterday and a couple days ago out here. So resistance right now in the NQ about 10.842, Stevie's green line, but everything on the daily basis has topping signals. It's the intraday charts that say there may be a rally into the resistance areas. Those resistance areas are Stevie's green lines or the top of these profiles. And that's data that subscribers get each morning so that they can plan their trades. They know what's happening on different time frames. Here, I'll give you an example or show you an example of the data that they receive out here. That data would be, coming from right here. So I mentioned, oh, what did I just do? What just happened there? Oh, well, folks, that was not supposed to happen. What just happened was not supposed to happen. I think Stevie hit the wrong button. And that is a total bummer out here because I got 2 minutes live air to try to figure out I got rid of that screen. Oh, man, it's doing other stuff. Lord, let me see here. What did I do? Oh, I see. I did test it. I did grab the wrong. Okay, so we're sort of back, but I've got something working on the background that could cause me a slight problem. But back to what I was saying out here. So here, if we take a look at, so these are the major instruments out here that many people are trade or track equity future wise, I should say, not all equity futures. We've got the first 4 equity futures contract, the ESNQ, the Dow, the Russell 2000. You've got gold, silver, light sweet crude, natural gas. So light sweet crude. Let's get that set to the proper contract out here. So that should be 09. There we go. Same thing with natural gas. My apology. Just a little bit of housekeeping here. And this way we give you the correct levels out here. If you're inside the Tiger's Den, you're able to grab this and take a look at these numbers. But these are the key areas. We've got our TD9 count support and resistance areas. So you've got those for the 30-minute time frame, the 60-minute, the 2-hour, the 4-hour, the 5-hour, and the daily out there. And these are the key levels to be looking for support or resistance for these specific instruments. So subscribers get that. I take a look at that each morning to understand where price is trading in relationship to those key areas. I also like to take a look at where is price trading in relationship to the oscillator unchanged line. That's that little Stevie green red line. And here you're taking a look at it for daily, weekly. You've got 30-minute, 60-minute, 2-hour, 4-hour, 5-hour. You can see the actual time that it's live. And these are also key levels of support or resistance. And they just simply help you to understand where is price trading in relationship to those areas. Where is the likely price target? Its price is moving higher or lower. You'll see some little up arrows and down arrows out there. They tell us whether that line is really green or red. The green or red line has a different meaning to it. And again, I teach you all about that in the archived workshops should you wish to pursue that. Now, we had a request yesterday that I didn't get to. So we come back from this break. The market's going to be open. But for Suzanne, who's in a trade, and I believe there's earnings after the bell today, and she wants us to take a look at the ticker symbol APHA. And that's Afria. And right now we can see is Afria is trading above all resistance, TAS market profile resistance, daily, weekly, and monthly. And that's bullish. Steve Rhodes with TFNN, filling in for Larry Pesavento from the 9 to 10, and filling in for myself from 1 to 2, and we'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at ticker symbol APHA. and that is Afria Inc., and this is for Suzanne in Canada, who is long this position. This opened up a little bit higher, trading just slightly off of that high, but did gap up to the upside. Again, prices above the top of its daily, weekly, and monthly profiles out here, and that's bullish. Now, the month is not over, and so what you're looking for, Suzanne, is a close above 559 to confirm that nice bullish message out here. I don't have any real topping signals, with one exception. Yesterday, this did enter into wave number 7. That's the letter G that's on my screen out here. If you're watching this this is a daily time frame chart for this instrument, and that can be a place where there would be some type of pullback, but the letter G is going to extend itself, Suzanne, until there's a lower high. So today's a higher high than yesterday, so it would have a confirmation of that pattern. Price yesterday took out the 517 area. That's Stevie's that's the TD9 count breakdown resistance level. Closing above that was very bullish. So this, and there's several A to B equals CD patterns to the upside out there. So on the daily time frame, no signal, a caution signal, maybe like take your umbrella with you to work, so to speak, but not a reason to exit your position out here. On the weekly basis, I don't have any type of a topping signal. On the month, I did get the bottoming signal. Saw that back in March. That was with the TD9 count out here. Quite frankly, this is telling you over the long haul, price wants to target 1619. It's not going to do that tomorrow, not going to do that today, but you do have that nice bottoming signal. And on the monthly time frame chart, this tells us, Suzanne, the price is targeting 768. That's the TD9 count breakdown level out there. So with regard to Afria out here, I don't see any reason for you to jettison the position, so to speak. So I hope that helps you out, and best of luck with those trades out here. So if we go back down to we spent a lot of time during that opening segment to say, hey, let's go take a look at, what are the equity futures markets telling us? We've got mixed messages still out here. What do you mean mixed messages? Let's take a look at the Russell 2000. Take a look at its opening bar here. Not really opening bar, but in a 30-minute. So you see, here's your Gartley buy pattern. Price is running right up to resistance at that 1482.40 level. That's where we're trading right now. If on a 30-minute basis, which is not for another 28 minutes, but if we see it close above this 1482.40 level, the weak link, which really is the Russell 2000, is signaling to us that we may see an A to B equals CD to the upside. We need the 30-minute bar close. It's got to close above that resistance point. What does that? So here's the Gartley buy. We see that. The A to B equals CD pattern out here would look like this, could look like this. Now, the B point is not going to be taken out for a while. That's up here at, let me try to give you that figure. Well, I will give you that figure, not try. I just can't see it right now behind everything else that's on my screen. But it's the high here. Come on. Do this. Work with me. But you can see the A to B equals CD pattern. All right, I'll have to do it some other way. But here's the geez Louise. Give me a moment here, folks. I'm not really technically challenged, but it appears that I am. So here's your A to B equals CD. That would get you to the first level would be 1500. Now, of course, you've got to pass the B point out here, which looks like it's around 1488 or something like that. We're at about 1485. Let me give you the exact number. How can I do this? Well, it's going to be the high. I know how I can do it. It's going to be the high of the day out here inside so the level is going to be 1488. Yeah, it was pretty close, huh? 1488. You see a move above that, then you've got your A to B equals CD pattern, and you've got resistance at 1492, the top of that daily profile out there. With regard to the other indices, it looks like a little bit of weakness inside the NQ as the market opened out here. But let's go take a look. Did that do anything? Did it negate anything? And the answer is no, it hasn't. Still trading above the 10,589 area out there. With regard to overall market breadth, let's take a quick peek at the New York Stock Exchange. New York Stock Exchange, just take a look at its advanced decline oscillator reading, just slightly below zero right now, which puts the market potentially in the hands of sellers. But that spot volatility index still well below its 50-day exponential moving average. The 50-day exponential moving average is 29.79, and for folks not familiar with using this as a tool, as irrespective of the number, we don't care what the spot volatility index number is printing. It doesn't matter whether it's 50, 80, 20, or 12. It just doesn't matter. It only matters where is it trading in relationship to its 50-day exponential moving average. When it is below, then the market is deemed to have plenty of liquidity. And this is just specifically for the S&P 500 out there. And when it is above the 50-day exponential moving average, just the opposite. You will see that the erosion that takes place in a down market, the real erosion, will occur when that spot volatility index is above the 50-day exponential moving average. That is not the case. Now, let's go over and take a look at gold and also the currency markets out here. So let's start with the currency markets. We've talked a bit about the TD9 count pattern out here. If we take a look at the U.S. dollar, if that pattern is going to identify a top or a bottom out here, it's going to do it on bars, or needs to do it on bars 8, 9, or the bar following 9. Well, if we take a look at yesterday's low, that was the bar following 9. As long as price remains above that low, you have a valid bottoming signal. Now, that valid bottoming signal may just do one thing. That one thing, Curly, is simply take price up to Stevie's red line. That's at 94.62. The call right now, just looking at the daily time frame for the U.S. dollar index, is that that's what it wants to do. Now, we need to go take a look at a 30-minute time frame. I don't know if I've got this here. We've just got it for the euro out here. But let's put up the U.S. dollar index for the 30-minute time frame, see what its message is. So give me just a second for this to populate. Here we can see that when this did bottom, so you love when you see a daily signal out there, top or bottom, you like to come down to the shorter term time frames and also see the same thing to support that bottoming potential for that bottom. Well, here we can see as the low is being made inside the U.S. dollar index, it was forming a Rhodes momentum indicator bottom. Those are those black diagonal lines. My screen automatically draws them, and there it follows my very specific rules. Again, the specific rules that I teach you so that you can trade this pattern, understand this pattern, be able to interpret the message of the markets out here. We can see some higher highs and higher lows out here, and this tells us that because of that bottoming signal, what we should see is price target 94.31. If price can close above 94.31, it would be a signal of a potential change in trend. So again, the U.S. dollar index, you've got a nice TD9 count bottom. And what that does for you, long or short, your take on the U.S. dollar, your take of the euro represents 56.7 or 57.6. I don't remember. I'm a little dyslexic at times, which is a good thing because that means I see things differently. And when you trade these markets, you want somebody to see things differently out here. So the cool thing is that you know that yesterday's low inside the U.S. dollar index, 93.42, if you see it close below that this pattern did not identify a bottom. There's huge momentum to the downside. That is the beauty of it. Now, here's what the pattern is on the U.S. dollar index. Let's go take a look at what is the pattern on the euro. Maybe different, is substantially different, doesn't have a TD9 count top. In fact, yesterday's move took out that. So the euro is suggesting that it wants to move higher, yet it represents such a substantial portion of the U.S. dollar index out there. So here you can easily make the case for why you'd want to be long the euro. But we also can see a counter trend rally, at least a counter trend move inside the U.S. dollar index. So maybe that means on a short-term basis, we see the euro move lower, the U.S. dollar index move higher. Steve Rhodes with TFNN. We'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Welcome back, folks. So let's take a look at gold, silver out here, and we'll begin with the gold contract. Oh, we got the silver contract out, actually. So as we take a look at silver, this is going to be important here. Today's going to be, or appears to be, well, first, we can see an A to B equals CD pattern, a 1-to-1 level. That was hit yesterday with a nice wide-ranging bar. Today is an even wider-ranging bar, but today's bar is more ominous, or potentially more ominous. It depends upon where silver closes. What I want you to pay attention to on today's bar, there's really a couple different messages out here. We can see that price exceeded both the high and low of yesterday's bar. You can see that it's trading lower from the open, so it's trading down a tick. And this is what's referred to as a key reversal bar, or could potentially be a key reversal bar. If silver closes higher above its open, then it is not a key reversal bar, even though the prior day's high and low was exceeded. So this is a topping or potential topping signal at the completion of a 1 to 1.272, A to B equals CD to the upside. However, the price move lower was right into two places. The center of its bullish structured profile, and prices trading back above the top of that, which is 23,239. That's still bullish. And price was also testing Stevie's green line. When the line is green, what it tells you, folks, is that the price oscillator, the difference between the 39 and 19-day exponential moving average, is above zero. And that is bullish. So you've got the potential for a topping signal out here, but you do not have any key levels of support that have broken. And therefore, you stay inside the trade. And since we're talking about silver, let's go speak with Gary in New Buffalo, Michigan. Gary, thanks for calling. Thanks for holding. How are you?
Hey, great. And I was hoping you were moving towards silver.
So we've got problems. So this is where we're going to run into a problem. My apology, Gary. I've got a Skype issue, and the sound is just not coming through, and I don't have any way to fix that. And you may be talking, and my apology, I can't hear you. But I know that you want to talk about SLV. I'll just continue talking about silver here, and hopefully this gives you the answer to the question. Let the guys in the production room, get them on the. Hopefully they'll get on the phone. Maybe you can ask your specific question, and then I can go to it. My apology. I wasn't sure what was going to happen out here, but that's a real bummer. So I do want to speak to anybody that calls in. But here from the daily time frame with regard to silver, and I know that you're long silver out here, Gary, is you've got conflicting messages. But we're going to go with the message out here that support hasn't broken. And as long as support hasn't broken, you should stay with that trade. In order for silver to generate a message that it's going to pull back, and by the way, the pullback level would be 17 99. That would be the first pullback level. That is where silver broke out. In order for that to happen, you've got to see it close below 21.94. It's a bullish structured profile. It's held. Now let's go take a look at the shorter term time frame charts, and we're sticking with the silver contract versus SLV because this is really the underlying instrument. And so this is really what's important to be monitoring and tracking. As we take a look at the 30-minute time frame, we can see a nice TD9 count high out here. That formed at 9:30 last evening, and we can see a TD9 count low. See, it's the bar following bar number 9. So that was a big swoosh out there. Maybe it was to, get who knows what the reason is. Let's not speculate. We don't need to speculate. All we need to know is a TD9 count pattern. And we need to know when you see bars 8, 9, or the bar following 9, and either of those bars are making the high of the pattern or the low of the pattern, that's giving you a topping and bottoming signal. And then you need to know where is support and resistance. When I put up any chart for any time frame, it immediately shows us where support and resistance is at. It's not objective or subjective at all. It is absolutely objective, or at least they're objective with regard to the tools that you and I use out here to assess where support and resistance is. So at this stage here, on a 30-minute time frame, we know we've got the TD9 count bottom. Price is trading with inside its current profile. Support is at 23.40. Resistance is at 24.09. I don't know which of those will be busted through. If 24.09, if there's two closes above that, that would tell you silver could easily run at 25.96. And if it trades below that, well, the below that would be $23.40 out there. And really, we took a look at the daily time frame with regard to what it is that you should pay attention to. With regard to silver, Gary, I hope that helps to answer your question. My apology for not being able to hear your voice on your call. Now let's go take a look at gold. What do we have for gold? We don't have a key reversal session in the case of gold. We have the high from yesterday that was exceeded, but not the low. And so, therefore, with regard to Goldilocks, today is going to be bar number 7 of a TD9 count. We know that the high can occur on bars 8, 9, or the bar following 9. If you don't believe me, you don't have to. You just have to look at the charts out here. The last high, the last legitimate TD9 count high that formed out here was on bar number 8. What did we see? We saw price go ahead and pull back and trade sideways, really for weeks out there. So what we want to be paying attention to is going to be Wednesday, Thursday, and Friday with regard to the gold contract, because that could be identifying a significant top. A significant top to do what, Steve-O? Well, the significant top would be to pull back to support. Well, where is support? Well, where breakout support is at 1766. Now, if there's a new TD9 count pattern that forms, there would be another TD9 support level. That support level, I can give you what that would be, but we don't know if it's going to be because that pattern has not completed or even formed just yet. It's in the process of forming, but that support level would be 1806. So it'd be 1766 to 1806. That would be the support levels on a pullback inside of gold. That's not its profiles. That's just simply the breakout levels of support for Goldilocks. But no topping pattern on the daily time frame is yet been solidified. If we look at the 30-minute time frame chart here for gold, what are we going to see? We're going to see that this formed a TD9 count top. You can see bar number 9 at 9:30 last night. And you folks, this is a easy pattern to trade. If you trade these instruments, if you're trying to teach yourself to interpret what the message of the markets is, then this is the place to start out there. Just go subscribe to Mastering Probability. Go through the workshops that are on there. That'll be way better even terminology. It'll be way better than any books that you could read out there. They'll go through charts and the examples and the exact particulars of the patterns. Well, here you've got the TD9 count top. It breaks the first level of support. That was at 1931.40. Price was moving down with a nice wide-ranging bar. Stayed in that area for a while until about 4 o'clock this morning, 3:30, 4 o'clock this morning, where price immediately went down and found support where? At a TD9 count breakout level, 1904. There was another area of support. We won't go into it. Earlier, 1900, which was the perigee support out here. I guess I just went into it. But so price hits support. Now you're watching with regard to gold is how does it handle resistance on its 30-minute time frame, and that is 1937.70 out there. So that's what you're watching. Again, no topic, different pattern inside of gold's daily chart than silver's daily chart out here. Now, I know there's some requests that have come in. I've just got about a minute here. Paul wants to take a look at Tesla. So let's throw that up on our screen out here. TSLA is the ticker symbol. See where this is trading in relationship to its TAS market profiles out here. So we've got Tesla. This will populate here momentarily. TSLA, again, is the ticker symbol. And Paul, this is trading inside the support of a bullish structured daily profile that formed 2 days ago. So its key level of support out here is 1456.80. If price were to close below 1456.80 in 2 days in a row, that could signal that price would be pulling back to the 1136 area, and that is the top of its weekly profile. Now, you'll see on the weekly profile, you see this every now and then. You don't see a center line. You only see green and red. Green is support. That's at 948.19 on the weekly time frame. That's also the center of the box. Right now, price trading above support in Tesla, 1456.80. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 185, S&P's off 17, NASDAQ is down 97 points out here. So in checking my emails for those requests, this is pretty odd. I haven't seen this happen before. 3 of the 4 requests out here are for Tesla, all from different people. Paul wants to take a look at Tesla. Tim wants to look at Tesla, and Wayne wants to look at Tesla. I don't know what that means, but it does mean we're going to take a look at Tesla just to go ahead and complete this. So what I want you guys, each of you, to know out here, I'm assuming that, I don't know, I'm not going to make an assumption, but here with regard to Tesla, what are the patterns that are in play out here? If we take a look at Tesla, you can see that this has formed a TD9 count top out here. It was the bar following bar number 9. That's what made that high out there. So you've got a topping pattern. Whenever you have a topping pattern, all that really gives these sellers the opportunity to do is push price back to support. So we identified that key level of support out here. That was the bottom of its bullish structure daily profile. So for those of you that are looking to go short Tesla, you would have that message on a close, 2 closes, quite frankly, below 1456.80. That's the bottom of its daily profile. Now, if that were to occur and unfold, then what you would anticipate is price moving back to its breakout area. Well, where is its breakout area? On the daily basis, that's 948.52. The instrument is traded at 1485. Should you enter that short trade now because we have this TD9 count topping pattern? Absolutely not. You've got a bullish structured profile. You know that the bulls are out here trying to support price between 1456 and 1508. If price could pull back to 948, it makes all the sense in the world to want to go ahead and take that short trade out here, but let the market prove itself to you. Let it get close below 1456.80 at least one day. You prefer to see 2, but at least one day. And I would not, even though you've got the topping signal, I would not do it just yet. I wouldn't pull that trigger. On the weekly time frame, as we take a look at Tesla, we don't have a topping pattern whatsoever. And price is trading above the top of its profiles, as we took a look at Stevie's green line, which is 1270 out there. So, folks, been great to be with you at 9 a.m. Watch the bottom of the profile for the Dow Equity Future Contract. That's 26,178. That's the one that would be closest to testing support out there. A close below that could spell curtains. But stay tuned, folks, because the best curtain is about to open up. You get the double dose of the O'Briens, and have a terrific Tuesday, folks.